Folks, welcome to Thursday Night Stock Charts Live. What we're going to talk about tonight are the weekly charts, how are we poised to close out the historic trading week, and where do I think that we have support levels on the S&P 500, the triple Qs, and the small caps. We're going to talk about our performance this week. How are we doing? How has our week been? We're going to talk about what's been working and what has not been working, and where we should be looking to put our money to work moving forward. We're going to talk about economic data. We're going to talk about headlines that are going to help drive this market moving forward. We're going to talk about the Federal Reserve. We're going to take chart requests. I'm going to try to take as many chart requests as possible. Members that entered your symbol on the ticker cloud in the members area, that page is down. I could not get access to it. So please re-enter them in the chat box. Members come first. I always have to put members first. So please, members, enter those symbols. And first, let's kick things off with comments. As we wait for people to sashay in. NY Jets. Hey, brother. Yeah, fun. Yeah, a lot of action this week. Louise, in the words of the famous Jackie Gleason, and away we go. There's a meme there somewhere. I think it was Talon that posted in the Slack forum last night the GIF maker. So I'm gonna think about that. He posted a what do you call it? A meme and a GIF. So I'm gonna try to make something up along with Jackie Gleason, and we'll have that working for. I'm not going to be live Sunday night. It's Father's Day. I got to go to my father's place to visit him, but for maybe next Thursday. Racing at Churchill Downs canceled tonight. Whoa! Oh yeah, and the cattle down over in Kansas. I thought that was a joke. It was no joke. There's poor animals. Evening, Franklin. Joe, when you get a chance, yeah, you got it, man. And Talon, hey, brother. All right. So let's talk about our strategy for the week. And I'll be honest with you. I'm pretty vocal. I say it the way it is. I don't usually speak my book. I may lean towards persuading people to be on my side of the book, but I was quite frank last Sunday night and on the week I had commentary with members. I thought I was overly bullish on the market, meaning not that I was bullish sentiment-wise, but when I closed out the week last week, I said, man, I have too many longs on. I'm too skewed to the bull side. And sure enough, Monday morning rolls around. The whole goddamn thing goes against me, but I didn't let it change my tune. I lightened up. So starting off this week, I took a hit. But as we proceed into the back half of the week, because we said, okay, let's focus on the one key word that matters in surviving a bear market, and that word is liquidity. Because we focused on liquidity, here we are on Friday Eve, and we're doing very well on the week. Our gold mining stocks, silver mining stocks, gold, silver, all ripped today. All outperformed the market. Cal-Maine Foods, one of our food stocks, outside reversal bar, did very, very well. We showed patience with it. Believe me, I was getting nervous with it. But the macro story is on the side of these trades. So we also yesterday, while I'll admit last night, I said, I got to give odds to bulls here, because not that I believe that the Federal Reserve by any stretch of the imagination has been doing a good job, but I agreed with them that they needed to raise by 0.75 of a basis point. I didn't think they were going to do it. I'll be honest with you. I think that they are spineless jellyfish. And I'll point to you tonight, how I still know they're spineless jellyfish. The expectation I had was that they would do a 0.5 point hike, and they actually came in with 0.75 point hike. And the other reason why I have a problem with them is that they should have done this a long time ago. A long time ago. So probably, and I'm talking towards when the old lady, the Treasury Secretary Yellen, was in charge of the Federal Reserve. So uh, we're very close to a short-term bottom here. We're going to talk about valuation in a moment as well. So let's get to it. Let's say hello to everybody else. Trish, I never replied back to you. I'm sorry. I promise you I'm going to send you an email tonight. Hello to you. Paul, hello. All right, let's get to it. Okay, so this evening we did an earnings trade on Adobe. They reported after hours. They beat on expectations, but their forward-looking guidance, no bueno. It's consistent with what we've been seeing in tech land. And so what we did is that I sold a deep out of the money naked call. So it was an options trade, deep out of the money. I mean, they were paying big bucks for a 2 standard deviation expected move on Adobe. So that should be a home run profit for tomorrow. So we'll look to take that trade off tomorrow morning at around, if we can get 70% profit, I'll take that. We'll just redistribute funds because I do believe that it's time to once again begin raising liquidity, because I think that we're very close to a bottom. And on certain indexes, we're probing a bottom. S&P 500, I think the small caps as well, not quite yet on the triple Q. So we'll go to those charts in a moment. We'll go to the weekly charts. Remember, when I go over the weekly charts, one trading day left to go, because Fridays make a big difference, especially this Friday. Why? Because what we have coming out tomorrow, and we had VIX expiration today, what we have coming out tomorrow is, I'm so out of sequence here. Where is it? Here. Not that bad. Dow dumps below 30K as huge OPEX looms. So we have what they call triple witching. Triple witching. There's about $3 trillion worth of options that are about to expire. You're going to see people need to position accordingly, their portfolios. They're going to have to roll positions. There's going to be a lot of activity tomorrow, a lot of volatility. And I wouldn't be a bit surprised if a lot of what we saw today was in advance of a $3 trillion expiration. So expect more volatility tomorrow. Now, I'll talk to you a moment about where I think we're going tomorrow. And first, though, let's begin with today. Capitulation? No, this was not capitulation, folks. I'm going to talk to you about it in a moment. We are nowhere near capitulation, unfortunately. I've been saying this. We are now down dramatically off the highs. I've been steadfast in saying that we are not at the bottom week after week, and we keep heading lower and lower. We're not at a bottom yet. How do I know that? We have not seen the blow off top on the VIX. There has not been enough blood in the streets. I know that sounds crazy. People are losing their shirts. Portfolios are blowing up. Hedge funds are closing. You had Revlon that went bankrupt. They reported overnight or this morning. They're one of the first names to go under, and that's just the beginning. There's going to be a lot more bankruptcies out there because you have companies that are levered up. And now they got to roll over that debt into higher interest rates, and now they're going to have to prove their business model. If you couldn't make money at lower yields, well, how are you going to make money with your business model and pay out higher yields on your debt? So when you begin to see M&A deals start happening, that's when you know, okay, we're getting there. We're grinding through this. Companies are seeing value in other companies that are suffering, and they're taking advantage of what they perceive to be low valuations in the market relative to growth, sales, etc. This would help. And the other reason why I know we're not at the bottom is that technically on the VIX, we haven't had that blow off top. I'm a firm believer in a blow off top on the VIX. We're not there yet. Soon. Okay, so this is off Greg Hunter. I didn't watch the interview, but I like the headline here. They're pulling the plug. It's game over. Yeah, to a certain extent they are. They are pulling the plug on the Fed put that's been there since, they want to say since 2008. That's not true. It's been there since 1990. 9. Even before that, the Fed put very, very low yields. The reason why the dot-com bubble went bust is for two reasons. One, Y2K came and went. They pulled demand forward. Two, Federal Reserve was raising rates. Perfect storm. Then you had 9/11. So economic data that came out today that must really have the Federal Reserve freaking out. And it makes sense why they had to make that move yesterday, that move of 3/4 of a basis point, and why Powell said that he doesn't plan on making a 3/4 basis rate hike the norm. So he did caveat yesterday's rate, trying to calm the markets. Now, initially, he had a short squeeze, but ultimately, when I went to bed last night, you had the futures up 3/4 of a percentage point. By the time I finally closed my eyes, woke up, checked my phone one last time, that's a bad thing to do. They were drifting lower. When I woke up this morning, they were down 2.33%. I was like, oh, it was not a good thing to see, especially when you're heavily levered to certain positions, and we were levered to the gold stocks. And gold was up. That was one good thing. But by the time we opened up, gold had gone negative. We were up $15, $17, went negative, then they drifted up higher. So believe me, I was a little bit shaky this morning near the open. More economic data which came out today. U.S. housing starts permits collapse in May. Very, very bad. Think about this now. So you have current housing starts and building permits. Building permits are considered a forward-looking indicator. So if they're not filing for permits, well, they're not breaking ground on any new jobs anytime soon. That's going to slow. So any permits that have been issued, they may or may not be executed. Just because a permit was issued last month doesn't mean they have to break ground anytime soon. That permit could just linger out there until the cost of lumber comes down, copper, et cetera, and then the profit margins make it reasonable for the builders to begin building new properties. They're not going to want to sit on inventory. Jobless claims. Now, there wasn't a big miss on jobless claims, but what this article is pointing out is the trend. We are definitely seeing initial jobless claims drift up. Exactly what you don't want to see when the economy is slowing and the Federal Reserve is ramping up interest rate hikes into a recession. There are people out there, and I find it really funny. These are supposed to be Wall Street economists, Wall Street bankers that are talking about a recession in 2023. Are you out of your mind? A recession defined is 2 sequential quarters of contracting GDP. We already have 1 quarter under the belt. This is only Q2. So you're going to tell me it's going to take another, let's say, 6 months to identify or more whether or not we're in a recession? I don't think so. So what I think is going to happen here is that we are going to see a negative print on GDP for Q2. Why? Because the Atlanta Federal Reserve has lowered their growth rate yet again from 0.9% growth last week to goose egg, 0, not a flat line this week. So the Fed's laughable forecast. The Fed argued that a hot economy has very little impact on inflation, hence the Fed does not need to be preemptive. This is comical. This is comical. This is coming from these are the people that rule the world. These are the central bankers. They expect you to buy this garbage. They printed the money. They requested that Congress authorize more spending so they could print the money. The very definition of inflation is an expanding monetary supply. They did this. They wanted this. They got this. They won. The Fed's forecast assumes a perfect soft landing. Growth slows to trend. Growth is negative. Growth slows to trend, and unemployment rate settles near 4%. We'll probably easily get that. If you use the U6 number, not the U3, which is currently at what, 3.5%, the U6 number, which counts those that are partially attached to the workforce and those that are marginally working part-time. So, and those who have multiple jobs. That's at around, I don't know, 6-7% right now. So they're expecting a 4% unemployment rate. I think that's highly, highly conservative, what we're about to get. And inflation tumbles to 2.2% in 2024. So you have the CPI, which is running 8.6% minimum annually. You have the Fed's funds rate, even after yesterday's joke of a rate hike, well below the rate of inflation, yet they expect the unemployment rate to stay at 4% and for inflation to tumble to 2.2% by 2024. Man, they had better expect a lot of demand destruction. That means they're going to put this economy on chemotherapy. And guess what? They are doing it. They're pulling the plug. Philly FUD index contracts, largest first time since COVID. U.S. housing starts, permits collapse. They're doing it. So stagflation is likely to be with us for a while. And that's very, very true. So this being a known, and I've been professing this for literally months, if not years now, that we are heading into a stagflationary environment where you have inflation because of all the money printing, and you have growth, which is declining organically because all the government spending is soaking up liquidity out of the private sector. Then you add in now that the Federal Reserve is supposed to be reducing their balance sheet. Wink, wink. They're not. And they're raising rates into an economy that is already slowing. This has never been done before. Never. You want to talk about voodoo economics, you're witnessing it right now. So where do we put your money? You got to put it in gold, silver, the miners, because while the markets are getting obliterated, gold, it's consolidating. This is a weekly chart of gold. By the way, this is TrendSpider automated trend lines, technical analysis, seasonality, 35% discount code below. So this is not a horrible chart relative to the equity market. So what is gold doing? It's building a base. That's all it's doing. Here is your wedge formation. We may spend another couple of weeks within this wedge formation, but guess what, folks? While the equity markets are getting hammered this week, gold was up last week, gold is up this week. And even today, the price of gold was up 1.27%. Let's say the NASDAQ was down 4%. That's a 5.7% variance. That is a huge, huge relative outperformance versus the S&P 500, the NASDAQ, whatever equity sector you're looking at, unless you're in Procter & Gamble, which did well today. Did they finish higher? Gold is vastly outperforming. The PG did well today. Procter & Gamble, good one. I just only happened to notice that because I took a peek at my my visualizer earlier, and here was the market today. And you only had a few names up, a couple of drug stocks, Merck, J&J, but the one that caught my eye was Procter & Gamble, consumer staples. Now, I'd be happy for them, but I'm boycotting Gillette, which they own, because they're a woke company, so they're on my boycott list. So unfortunately, I can't do business with Procter & Gamble. Anyway, I digress. So moving on. So the Federal Reserve raised rates. They hammered the street yesterday, but a deadline is kind of come and gone. And that deadline is June the 1st. The Federal Reserve was supposed to roll off debt off their balance sheet. effective January 1. I believe it's 35 billion in total, 25 billion in treasuries, 10 billion in mortgage-backed securities, in that ballpark. Fact check me on that. I'm in the range. I could be off by a couple of billion. Pocket change to the government. They'll send it over to the Ukraine, whatever the spread is. So what's the Federal Reserve doing? Bam. Here's their balance sheet. Here is June the 1st. They were supposed to start rolling off debt off their balance sheet. Well, we started off the month, as reported June the 1st, 8 trillion, 915 billion, $50 million. Where are we now? 8 trillion, 932 billion, 420 million. So there's something wrong here. Something is not matching up. Their rhetoric is not matching their actions. What else is new? Why else do you think that people are coming out? Even Steve Leisman talking about the credibility of the Federal Reserve. Oh my God. This country, or the country, is going to learn what a recession is worse for votes than high inflation. The country is going to learn. The political elitists, I hate when people call them elites. I hate that. They're elitists. They believe themselves to be superior. They're not. But they think they're going to win this war, and we are at war. So when you have a political party that is so morally bankrupt and they have no ideas that sell, they go to war. They've gone to war with their own people, vaccine mandates, etc. They've taken one half of the population of the United States. They've Bible thumpers and deplorables, as Obama and Hillary Clinton would consider them. So we're at war. We're at war with Russia. So when your ideas are very, very bad, history is replete with governments that go to war to take the focus off of them. There's only one problem. Inflation matters. And people don't give a darn, net, when it comes down to their pocketbooks, and when they're spending $100 to fill up their gasoline tank, when 2 years ago it took them 50. That's real money. So the political elites decided that they were going to hammer the fuel companies, who are no angels, and they are making money hand over fist. But why? Their margins are up. You had everything that we've done so far is self-inflicted. We could have cut back on taper years ago. We could have cut back on the spending years ago. We could have raised rates years ago. That's self-inflicted. Kicking the can down the road, leaving it for the next guy. That's not leadership. That's cowardice. That is cowardice. At least under Ronald Reagan. I know many of you out there are probably not old enough to remember this, but I am old enough. And I was a kid, but I was very engaged with economics and politics. And when I remember Jimmy Carter, and we were in the same situation we're in right now. We have high inflation, low growth, horrible sentiment in the economy. But now it's even worse than back then. And Ronald Reagan was a breath of fresh air. And he came in, and rather than being doom and gloom, the best days are behind the United States, he came in and said, no, the best days are in front of us. That's all anybody wanted to hear. He said to Paul Volcker, hey, listen, I got your back. You need to break the back of inflation. And that's exactly what Paul Volcker did. It took a lot of pain, but once he broke the back of inflation, it led to the greatest bull market in both bonds and equities in history. If people only had the courage to think positively, and I'm talking about the leadership, I'm not talking about people here. People here, if you're watching me right now, You're looking forward. You're not looking backward and saying, "Oh, gee whiz." The goal right now is for leadership to emerge. And one thing I knocked Donald Trump for was that he didn't cut spending. During his run for president, he said this is one big fat ugly bubble in equities, in debt, yet he never executed on it. So I don't think any president since Ronald Reagan is as perfect as Ronald Reagan could possibly be. He wasn't a perfect president, but he was pretty darn close to it. Our next leadership group needs to come in and say, we need to cut government. That's the only way to get past this. We need to cut government. And once we do that and stop making straw man arguments that it's the oil companies, rather than looking at ourselves, meaning the leftist lunatics in this country that, again, cause self-inflicted damage to this country by cutting the Keystone Pipeline, by cutting off oil leases offshore and on federal lands. This is all self-inflicted. 2 years ago, this goes to President Trump. This is all his credit. We were energy independent. Now we need to go to war with Russia. And what is that doing? Well, European natural gas soared 70% in a week amid Freeport delays and Russia cuts. So Freeport, they had to shut down a LNG port, and of course you have the Russian cuts. These morons, these idiots, talk about self-inflicted. All they needed to do to avoid this, and this is why I catch a lot of grief for this. Why don't I stand with Ukraine? Why do I understand the Russian position? Because it's simple. And it's not that I don't sympathize with the Ukrainian people. They're just like us. We got to deal with these idiots that are in charge until they're voted out. But all they needed to do to avoid this, the elitist EU, was to say to the Ukraine, listen, man, we're not going down this path. What you will do is declare your neutrality. You will not be joining NATO. You want to join the EU? Fine. But you will not be joining NATO. Declare your neutrality. And if Russian tanks come over the border after that, we're on your side. They could have avoided this. So nobody's going to be able to talk me into the fact that the Europeans did this to themselves. It wasn't Russia. They poked the big bear and they got smacked for it. Other reasons why today was a bigger sell-off than what was necessary, not necessarily in equities, but in the dollar. The dollar got competition today because when I woke up and I saw this, I said, aha, now this makes sense. And this is great. One of the reasons why gold rallied today is because the Swiss National Bank shockingly raised rates overnight, first time in 15 years. So I've been saying expect competition. I've been saying the ECB. I didn't think about the Swiss, and now their Swiss franc is near parity with the euro. So that's why one of the reasons why you saw the dollar come in today so hard. Let's go to some comments here. I got to take a breath. WG Shocker, is there truth? Is there any truth to the gold find in Uganda? I don't know. I'm not that smart. I'm not that smart. I haven't read about it. I'm pretty well read. I haven't read about it. That's something you'd probably read in one of the commodity journals. Hi, Bob. I'm catching up on double speed. I wonder what my voice sounds like on double speed. Listen to Josh Brown on CNBC. He's a local guy. He's by me. He is not afraid to tell the truth. Yeah, he's a good guy. We like the same restaurants. Hey, Yoga Mac, I'm going to go back to rewatch again as usual. Good to have you. Bob, why am I always late? No worries, my friend. You're always welcome. Always welcome. Falcon. So many people are feeling it in the gut, but keep in mind, it's nothing compared to the people of World War I, World War II, and the Great Depression. That is humility. That is humility. The problem is that the current, and it's not their fault, meaning the current generation. I don't want to be one of these guys that comes on and say the current generation, like some old curmudgeon, the current generation, they're not like when I was a kid. No, they've dumbed down entire generations now. They've dumbed them down. They didn't want them looking at the people of World War One, World War Two, the Great Depression. That was the great generation, the people of the Great Depression. They don't want people thinking about those people because they pulled themselves up by their bootstraps. They didn't need government. They didn't want government. They feared government. Now you have these schools run by the teachers union. Well, you got to have government. Government's everything. Government is God. That's why they don't want religion anymore in schools. They don't want religion. They shut down the churches. Hell, the poor pastor, I forget the pastor's name up in Canada. The poor guy was running sermons. They came into his church, arrested him not once, but a couple of times during COVID. These people, especially this Trudeau, I mean, these people are demons. They're lizard people. Liquid propane is more than double from 2 years ago. Yeah. And it's self-inflicted. It's self-inflicted. At least filling the track supply. Gotcha. The new way to handle this inflation is to encourage tier one underground gold projects to yield gold to pay out all bonds in ounces at maturity, back to dollar and gold. I like your thinking. I like it, but that would make it real. They can't do that. They need that fiat currency. Here's the problem: is that if you had a constitutional balanced budget amendment, or if you back the currency by gold, that's a discipline. That's fiscal discipline, and they don't want that because their power lies in the ability to print money and to spend it. If they don't have the power to allocate pork barrel spending, then what fun is it to be in Congress? Bob, is it possible for SPY to stay at these levels for a few weeks? Does it depend upon the dollar? Well, the dollar declining today probably helped the S&P 500. It certainly helped manufacturing. And, honestly, I think that we need to put to rest the fact that the dollar only adversely a stronger dollar only adversely impacts industrial names. It doesn't, because Microsoft came out, what was it, 2-3 weeks ago now, and they said, listen, we got to lower forward-looking guidance because the dollar's too strong. So many of the S&P 500 companies, if not 75% of them, they derive most of their earnings outside of the United States. So if the dollar's too strong, well, that's not good. And their products become more expensive. Therefore, they get undercut by local competition in those countries, like the EU. Yet now you have a block of countries, so you don't have to worry about necessarily French companies. You have to worry about all those countries that deal in the euro. So yeah, it's. I think today would have been worse were for the dollar. Were it not for the dollar pulling back today and giving up a lot of ground. So can we stabilize here on the S&P 500? Yes. I don't think that's true for the triple Qs. I'm going to go to the charts in a moment, so bear with me, Yoga Mac, on that. Great question. We are going to get to it on the charts. The only reason for Congress is insider trading hasn't that been shown to be the truth. I mean, that's undeniable. Everyone should be able to choose what school to send their school. Absolutely. No doubt about it. Competition. And the worst thing that these communists that run the teachers union want, they don't want student vouchers. They don't want that. They don't want competition. They need that monopoly. Without that monopoly, they know students are going to flee to other venues. And those quality teachers that are stuck in these public schools having to shove this propaganda stuff down kids' throats. You can't paint with a big brush all teachers. When I was in school, I had no idea what political affiliation, and I was pretty intuitive at my age for what politics were, being conservative, liberal. I had no idea what my teacher's ideology was. They didn't show it to me. So a lot has changed. A lot has changed. And I can't believe that a lot of these teachers wouldn't want to go to a venue, a school where they don't have to teach this CRT nonsense and go to just a better work environment and be treated with respect. Demand. Folks, smash the like button. I'm going to go over a whole bunch of charts in a moment. Some of them your request. Do me a favor. Help a good guy out. Take a moment. I'll pause here. Click the like button. Click the subscribe button. Help a fella out. It's almost Father's Day. Take pity on me, please. Okay, let's get to it. Let's go over did I go over everything? Yeah, I went over everything. We're running out of time. I want to do some chart requests. Okay. So for those that are here for the first time, what we're about to do is something that we do every Thursday night. If you're not a subscriber, seriously, Thursday night, you should be doing a pulse check on the weekly charts. How are we poised to close out the week? Because if you're a swing trader, if you're a position trader, even if you're a day trader, you want to know the bias of the market. So are we poised to see a continuation move lower next week? Well, you're not going to know that until you start getting a pulse check on Thursday nights. So that way you can think about your positioning on Friday. How do you want to be positioned on Monday morning? Now is the time to do it. That's why we're here. Besides me begging for you to click the like button and subscribe. So let's begin with yields. So yields are driving the market this week and as in all past weeks. All right, so yields are up on the week over 4.75%. Now we have a breakout. I don't think we hold the breakout. I think we come down and fill this gap. That's my opinion. And the reason is this, is that today we once again leaned into this is the wrong chart. We were leaning into the third standard deviation Bollinger Band. Yesterday, inside day. Today, an outside reversal bar. Very, very bearish. I think that we're going to pull back on the 10-year yield. Now, going to the monthly chart, you could see that what we're doing here is we are leaning up and into the third standard deviation Bollinger Band. This is not month one. This is not month two. This is now month three. We are nearing unsustainable levels of a repricing of yields. So while I believe that it's still possible to head up higher longer term, I think that shorter term, when I say shorter term, I'm looking at a monthly chart here. So shorter term could be several weeks to a few months where we pull back, we drift lower. So that's good news. That's bullish news. And it matters to identify this. Why? Why does it matter? It matters because I'm going to talk about support levels in a moment. And it's all about probabilities, whether or not your support levels are going to hold. So what increases your probability of a current support level holding? Well, if the probability of the 10-year yield moves up higher, the probability of current support levels holding goes lower. If the 10-year yield goes lower, the probability of current support levels holding goes higher, if that makes sense. Bond prices. This is a 20-year bond price. We're well off the lows of the week. So what I always like to say is that all down weeks or all up weeks are not made alike. they tell a story. What I'm looking at here is a potential. We won't know until next week, but a potential island reversal. What's an island reversal? It's a gap down, and you need not necessarily close up on the week. You could close at the lows of the week, but it's better if you have a reversal week where you close off the lows of the week, pretty much unchanged on the week. And then the following week, you gap up. That would be an island reversal. So I could see that setting up here. Do I speculate and say, I think that's going to happen? I'm going to position in advance of it? No. We'll wait for it to happen. We have plenty of liquidity to disperse, and we'll act accordingly. I don't want a Monday surprise. Now, tomorrow is going to be a critical day. I would like to see a bloodbath tomorrow morning, meaning same thing as we saw today, down 2 1/3% in the morning, but in the afternoon, we close up. And I think it's entirely possible. The tip market. I'm getting ready here to pull the trigger on probably selling naked puts, which is a bullish trade on the tips. And what that is I'm selling naked puts. Basically, I'm just looking to generate cash flow by selling an out of the money put. If it's put to me, okay, I'll take it. I'll take it at a discount. It's like a coupon because I like the shares. Now, the tips on a weekly time frame. I'll go to the reason why I like them in a moment. But big down volume, but yet we're rallying off the lows of the week. Now, when you go to a daily chart, a couple of things here. I want to update this. And I got to validate this is accurate. I was shocked when I saw this. The tips are yielding nearly 7%. Does anybody think that inflation is not going anywhere quickly? The reason why the tips are down so hard is because they think the Federal Reserve is going to beat inflation. They don't go anywhere. Don't go anywhere. They think the Federal Reserve is going to beat inflation. They were supposed to roll debt off their balance sheet June the 1st, or at least in June, $35 billion. It's gone up. It's gone up. So do I like tips here? It's nearly 7%. You darn tootin' I do. So daily chart. This is a congestion area. This is a consolidation. So I'm looking to sell naked puts. Heck, I may even buy the bonds outright, at least some, at nearly a 7% yield. So I'm liking the tips here. Very attractive, at least for trade. I'll probably initially sell naked puts. We'll see what happens from there. Dollar. All right, so I drew this line a few weeks ago. It was my price target on the dollar. I believe that we had probably seen a double top. It may be proving that I'm accurate. We have a bearish reversal week on our hands. So if you're wondering why the dollar is weaker, well, it's overvalued, one. It's an unsustainable uptrend. Two, the Swiss raised rates first time in 15 years. ECB is going to have pressure now. So if the ECB raises interest rates, what happens to the euro? Euro goes up. What happens to the dollar? Dollar goes down. If the Japanese end MMT, modern monetary theory, yen goes up. If you have the yen go up and the euro go up, the dollar tanks. The VIX. Now, I got to be honest with you. This chart scares the bejesus out of me. And I mentioned earlier that I do not believe that while I am short term, I can make an argument, and I'm going to make the argument in a moment, that we could have at least a brief rally on our hands. The VIX scares the hell out of me. What we're seeing here is a very, very sound base. we are building the right side of a massive cup. And at current, what we're doing is we are breaking out on a weekly time frame, one trading day left to go. What the hell is this? All right, everybody go over to this guy's website and give him attention. Block. All right. Dude, not cool. Not cool. You better like my my video, spammer. Okay, anyway. So the VIX on a weekly time frame, very, very concerning. And I'm going to be watching very closely at the end of business tomorrow. Do we break out on RSI? Because you remember, at least members will remember this, is that I warned back here when the VIX was declining, and I said, be careful. I drew these lines. I said, be careful. RSI is a leading indicator. Even though the VIX is trending downward, I'm worried about a breakout here on RSI. The minute RSI broke out, VIX broke out like a bat out of hell. And here we find ourselves today. So the VIX closed out the day up, obviously, but it closed off the highs of the day. And frankly, I'll be honest with you. When I woke up this morning, you saw VIX at a 31 handle, 30 handle, 30 handle, 31 handle. We closed at 32.95. Net from when I woke up this morning and the S&Ps were down around 2%. We closed down on the day 3.3%, yet we only had a few basis point move in the VIX. There's something wrong with that. There's something very, very wrong with that. So I'm trying to fit this square peg in a round hole and it ain't working. So something's up. So I'm skeptical of this move higher today in the VIX. It does look strong on RSI. I don't like the topping action, but I will tell you this, that if we manage to break out and close above this resistance level here, you're going to see the floodgates of hell open up in this market, because that'll have us firmly above one breakout point. If we break and close above 38 on the VIX, we're launching up and into the minimum the 40s, if not higher. I would assume under current circumstances, stress on the economy, both micro and macro, meaning the global economy, that we're going to have a hell of a blow off top on the VIX. So short term, I'm a bit skeptical. On a daily chart, weekly chart, we haven't firmly broken out yet. One trading day left to go. We'll see what happens. The Dow Transport. This is my canary in the coal mine for equities. What is it telling me? Doom. However, we are at a support level. Does it hold? We don't know. Are institutions selling? Yep, they are. Are my momentum indicators getting any better? Nope. So this chart here is implying on a weekly time frame that we have more room to the downside daily chart. So we have put in new lows on the month, but we haven't firmly closed down below those lows. We were down today on volume. I think what we need here is, again, I'll probably repeat this a couple more times, but it's worth hearing it. If you're wondering what a bottom looks like, I've been doing this a long time. I've been through multiple bubbles and countless corrections. You got to wait for a bullish reversal bar or an outside engulfing bar. What is that? If you're new to technical analysis, go down below, click the link, 5-part video tutorial. It's free. All you do, enter your email address. I send you out my 5 top favorite candlestick videos, and you'll know what a bullish engulfing is and what a bullish key reversal is. I just forgot. So what we want to see, in short, we want to see an ugly morning, horrible morning. We want to see capitulation. We want to see the news meet. We want to see Jim Cramer grow hair, right? We want to see insanity. And then we want to see buyers. We want to see buyers rip in and close this beast up on the day. That is what a bottom looks like, as long as it's at historical support. So the question is, are we at historical support? On the transports, you could argue, yeah, we are. What was resistance back here in January and into February of 2021 might well act as support now. It's not inconceivable. As we move on to the Dow Jones Industrial Average weekly chart, are we at support? You're darn right we are. The problem is that we've actually shot past the lower band of the declining downtrend channel in blue. So you could make the argument that we've gone a little bit too far beyond support number one, and we're hitting support level number two, which I believe we hit today. What was the low? 29.50. 29.740. No, we just fell just shy of 29.6 is probably a better number to use as support. If we trade down and into that level tomorrow morning and we reverse higher and close up and we close above higher, this lower band in blue, guess what? We're probably going to move higher next week. S&P 500 weekly chart. Again, are we at historical support levels? You bet your bottom dollar. We are. We've actually surpassed the lower band of the declining downtrend channel in blue, and we bounced off of what was support back in March of 2021, Feb of 2021, January of 2021, resistance back in November, December of 2020. This is very, very good support. Anybody who says we're just going to slice right through this like a hot knife through butter better be saying that Japan is going to devalue their currency tomorrow. So my argument is that rather than thinking about what you're going to sell today, unless you're on margin, then you got to think twice about that. But if you have liquidity, rather than saying, okay, I'm going to sit on my hands and do nothing right now, or saying, okay, now it's time for me to dump my positions, you got to be looking at these weekly charts and saying, okay, whoa. Let me take a breather here. Because now the markets, or I should say the financial news media, they're spewing blood. When usually they're very bullish. You have the talking heads, the slick back salesmen, their hair's nicely slicked back nice, $5,000 suits. They come on, oh, you got to buy because they're only long side. Now they're spewing blood. Guess what? I'm a contrarian. To me, that's music to my ears. I love it. When they're afraid, I'm buying. So the caveat is that I need to see a bloodbath of a morning and a bullish reversal bar. Simple as that. I think we get it. If not tomorrow, on Monday. Qs, weekly chart. Now the Qs, this is going to pose a problem for even the Dow Jones, because you have Microsoft as part of the Dow Jones, and especially for the S&P 500, is that you have the Qs, which are your NASDAQ 100 megatech stocks. Well, guess what? They're not at support yet, right? So this is why this may lag into next week. So how I'm currently positioned is that after the Federal Reserve meeting, we waited until very close to the close. And what I did is I opened up what you call a very wide strangle, meaning I sold a deep out of the money call. I sold a deep out of the money put with very high probability of success. Now, that call I sold yesterday is now up, I don't know, it's at least 40% in value. The offset is that the put side is down probably about 50% because you have so much volatility skew built into the puts. There's demand for those puts, so they're more expensive. So what I plan on doing in the coming days is, as we hit these support levels at around, my price target on the triple Qs is 265 to 260. What I'm going to be doing, I'm going to be taking those naked calls that I have out there with a profit. I'm going to take them in. I'm going to buy them back. I'm going to make that profit real. That'll leave me with a naked put, which is currently losing me money. But here's the however. When the Qs, and God, hopefully the Qs rally, and I'm right. When the Qs rally, the volatility comes out of those puts and they evaporate in value. So that's the game plan. Plus, we plan on, I discussed it with members, we plan on putting on some long call spreads. So that way we have a defined risk trade on. I don't want to take all my liquidity and go dumping it into the market. We're going to be prudent about how we enter the long side of this market, appreciating that we have a lot of minefields out there that could go boom anytime. That's the Qs. I'm not going to go over all these tonight. I'm going to go over a couple of charts that matter. Energy, weekly chart. Energy's given up. So they're coming for the generals now, right? Energy was the relative leader. Now on the week, it's a relative laggard. You have the S&P 500 down about 5.5% on the week. Energy, which could do no wrong, is down over 12.33% on the week. So the generals, they're coming for them. They're taking them down, and they're going lower. What else do we want to go over? Bitcoin down 23% on the week. Do we break 20,000? At least intraday? No, very close though. $83 away. All right, so a trade that is emerging, pardon the pun, a trade that is emerging very short term. When I say short term in this context, because I'm using a weekly chart, is within the next month. Emerging markets. Emerging markets are going to get clubbed over the head with the rest of equities until the dollar is finally done going up. And I think that it probably is done going up because emerging markets trade inversely of the dollar. Why? Stronger dollar is like a tax hike on emerging markets, and a weaker dollar is like a tax cut. Add to the fact that emerging markets are pretty much they're commodity producers. I don't know what that noise is. I just closed it out, whatever it was. They're commodity producers. So if the dollar gets cheaper, the value of their commodity exports, because they're valued in dollars, goes up in value. So emerging markets are soon to be a very, very big buy. We're going to be waiting for support to get tested. You could argue that we're at one support level. If we break 35, we'll come down to this lower band in blue. We will put on a very aggressive long position on emerging markets only if the dollar is declining. What else do we want to talk about? Crude oil. Crude weekly chart down 4.5%. I think we're maybe putting in a lower high here on Stokes, certainly lower high on RSI. Given that we are most likely going into recession, we might see a short-term top in oil. Gold until after the election. If they manage to whack oil down and get gas prices down at the pump, they will allow that to happen. But as soon as the elections are over, and if the Democrats still have any type of power, especially in the executive branch, they're going to jack up oil prices yet again. They're going to make it uncomfortable for you to use fossil fuels. Gold, weekly time frame. Now, gold relative to the S&P 500 is, yes, down 1.36%, but on a relative basis, it's outperforming the S&P 500 by a wide margin. Daily chart. Daily chart up today. We recaptured the support level. So the question is now, have we put in a higher low? We don't know that. I'm not going to sit here and blow sunshine and rainbows up everybody's, you know what, because I'm long of gold and the miners. And when I say gold, I mean the gold miners, silver miners. We don't know until we break out and above 882.50 on the ounce of gold spot price. So while I'm bullish, I'm still cautious. Our position in Nugget, again, all down weeks are not made equal. If we manage to close back above this line in blue, which is at 44.26, that would be a very good week, even if we close red on the week. Why? It's because we are respecting the breakout point. We broke out back here on Nugget back in February of 2022, had a massive rally. Then it all came apart. We recaptured support here. The week of May the 16th, rallied, pulled back. We are retesting right now. The question is, do we successfully retest or do we fail? Right now, we are failing. One trading day left to go. Let's go to chart requests. Oh, and by the way, how did Nugget do on a daily time frame today? Monster move. Up 4.11% relative to 3.31% on the S&P 500. Where do you want to be? Let's do some chart requests. Folks, this segment is brought to you by our friends, our very, very good friends over at TrendSpider. So please, if you love their software, which you should, automated technical analysis, and when I say automated technical analysis, automated trend lines, click of a button. You don't have to draw the trend lines. It's done for you. And even on this chart here, chart of Procter & Gamble, daily chart, the solid lines in red, green, whatever color, those are the daily resistance levels. But wouldn't it be nice on a daily chart to see where you had monthly or weekly resistance levels or support levels for that matter? Well, you got it in dashed line. Here you have monthly resistance on a daily chart in blue and again in orange. So 35% discount code below. Take advantage of it. TrendSpider. Let's do some chart requests. Let me see if the developers fixed the members area. Nope. Oh, no, they did. They did fix it. Okay, cool. Good. All right, so members, no need to re-enter your symbols. I have it, but you may not have been able to enter them because the site was down. Take a cloud. Yeah, you didn't get in there. Okay. All right, so let's do some chart requests. I know we have Joe. That's for all right, Donnie, we did Nugget. You're good to go. Well, we did the Qs already, Donnie. I don't want to redo those. We could, excuse me. We could do LABU. The difference between light sweet. All right, so you have WTIC is the symbol. That's light sweet crude. That's Texas Intermediate crude. Then you have Brent crude. That's out of the North Sea. Those are the two major oil indexes. Brent prices are usually higher than Texas light sweet crude because to drill in the North Sea is more expensive. There's less of it now, and light sweet crude is generally on land. I'm sure you can probably get some offshore rigs out of Houston, but that's the difference in short. Yeah, I was looking at WMT earlier tonight. That's a good question. Tom, I already went over NUGT, and JNUG is just the opposite of what I said. It's an inverse ETF. So I don't want to be redundant. So I hope you understand that. XOM, yeah, that's a good one. XOM. I wish I could text Bob about the message on the bottom corner. Message on the bottom corner. All right. Contact us. Uh, Joe, GS. All right. So we have 2 for LABU. GS we could do. That's a good one. Joe, we're going to do. NUGT we did. LABU we're going to do. That's good. I'm going to buy Bitcoin. Coinbase is in trouble though. For any new watches, that message is for spammer. No affiliation to Bob or Chuck. Oh, I see. I got you. Got you. Thank you, Yoga Mac. Good looking out, man. Yeah, man, this guy keeps posting. Dude, not cool. It's got to be a bot to keep doing this. I'm blocking him as we speak. But he's got multiple profiles set up. I just lost every single comment. I got to go to YouTube. Bear with me, folks. Ugh. Sorry about the delay. My apologies. I'm going to the comments section. This guy just wiped out all my comments on my software. I have to go to YouTube to view the comments. All right, he's reported. Okay, let's get to it. All right, we're kicking it off with Joe. Now, this one's been consolidating for a while now. I know, Franklin, this is one of your faves. This is a monthly chart. I mean, it's impervious to the sell-off. Let's face it. Yeah, it's down on the month 3.33%, but I mean, look at the S&P 500. So I love the consolidation here. The longer the consolidation, the greater the validation of any breakout. And I'll even argue this. Watch this. We already broke out. We broke out last month. This is the value of using macro charting. Monthly charts, weekly charts, then daily charts, then your intraday charts. Always start from the higher level view, because this is telling me Joe wants to go higher and maybe saying, Bob, it's down. What are you talking about? All down periods are not the same. A down month this month is bullish to me. Why? We broke out last month. This month, it's a retest of the breakout point. This is what normally happens. It's the rule, not an exception. So I'm bullish on the monthly chart, even though we're down. Weekly view. So we have a little bit of resistance above. Trying to see the play here. There's the play. That's the shot. I think that Joe can be bought. Small position. That's your opening position is your speculative position because you're buying it at a support level. If it breaks down below it, you take a small loss. So what? You move along. And you want to keep it small because psychologically, you can afford to take a small loss. You get too big here and you got to stop out. Psychologically, gets a lot more hard. Then you want to add more on the breakout. So already at support, we can buy this. I want to validate it on the daily chart, though. That may change my mind. So I'm speaking simply on a weekly time frame right now. I want to create an alert. I don't want any sensitivity. I only want to buy a closing breakout or add to a position on a closing breakout. And our alert's set. Frank, and I'm going to do seasonality on this one too. Okay, so here's a problem. And I want you to take note of something. I drew my trend line here in dash green, and the only reason why I'm bringing this up is yes, I'm touting TrendSpider. However, you don't get much closer with a manual trend line than what I just did. So I'm going to do this because look at this. I'm going to take it off. There you go. There's my manual trend line. Pop it back on. So if you're learning how to draw your support and resistance levels, great validation tool, even for an old dude. It's my ego boost. Okay, so Franklin, the only problem here with Joe on a very short-term basis, we had a bearish reversal bar. I'm not too concerned about it. I think that what could be done here, is this where we have our alert set? Yeah, we have our alert set immediately above. So we're good. Now, I would want to set another alert. Let's do a hypothetical. Let's say, okay, Joe traded down with the market. What if it trades lower tomorrow with the market? Where do we want to buy? Right down here. I would keep some sensitivity on because you may not get exactly there on the dime. I'll share this chart out. That's the shot. That's the play. And there you go. Okay. Walmart. Yeah. Walmart does look like it may be putting in a double bottom. Let's go to the monthly chart first. All right. So at current, again, automated trend lines saves a lot of goddamn time. So there you have it. Right now, we're below the lower band of support, which we held last month. This month, it's an iffy bet. So I would not be looking at least using technical analysis anyway. I would not be using Walmart, or I wouldn't be looking at Walmart as an investment because the technicals don't support it yet. But if I had favorable valuations, favorable forward-looking guidance, and we managed to close back above by the end of the month, this line in blue, my tune may just change, even if we close down in the month. Why? It's because it's the second consecutive month that we have held this lower band of support. Bullish stuff, weekly chart. Now, here's where the double bottom play comes in. And I agree with this. Now, we could do an undercut double bottom. What is that? Well, here is your typical double bottom. What if we fail to hold the lows of this candlestick here? Well, we may come down. Again, automated trend line. Click of a button, folks. I would create an alert here. I would entertain especially if we get a bloodbath tomorrow morning or on Monday morning, where we think we're getting a washout because we're at historical support levels. If you're just joining in now, I went over earlier the lows, expected lows on the QQQs, IWM, and S&P 500. So catch it on the replay. If we test intraday this lower band of support, I think that on a bloodbath morning, you need to step into the breach, buy. Small position, see if you're right. If you close up on the day, add more because the probabilities of moving up higher are very, very good. If you don't rally back by the end of the day and you close down below the support level, well, you may want to stop out and take a very small loss. I don't care if it breaks through. We're good to go. Daily chart. Oh, look at this. Look at this. Walmart broke out today. Very nice. Would I buy it tomorrow morning? No. Unless we hold this support level. I want to see a retest of Walmart. And there's something else I like going on here. I'll go to it in a second. That's good. The other thing I like here is this, is that when you take a look at your RSI, take note of this. All the time, we have been grinding lower. For the most part, RSI has just been waving along. The RSI is a momentum indicator. It gives you an idea of when, things have gone a little bit too far, too fast. You're losing momentum, and it's clearly signaling that. And in fact, we broke out. We broke out actually yesterday in advance of today's breakout. So you had RSI, which telegraphed today's breakout. Walmart looking good. I like it. Just look for the retest and add on strength. Count maybe be good for one to check. Broke out 47 today. Yeah, very, very. It was an outside reversal bar today, Donnie. Yes, we'll go over that one. You're welcome, Franklin. You bet, Tom. WMT probably had assistance by the deal with Roku to partner with the TV virtual shopping. I didn't know about that, but okay. Sounds like a good reason. All right. Any news is good news, right? These days. XOM. Avoid. Avoid, avoid, avoid. You have a bearish key reversal on a monthly chart. You have the President of the United States threatening major oil companies, and that'll crimp their margins. It hit good support today, but I would avoid it. I mean, I think that we could easily rally back here. The question is, are you doing it for a trade or an investment? Because if you're doing it for a trade, okay, that's fine. The problem is if you're doing it for an investment, you may be opening up your investment into what could be a double top on a weekly, monthly time frame. So I'd be very, very careful here with XOM. The political winds are not in its favor. So be very, very careful. And not even political winds. You have the economy, which is clearly slowing down now. So if we do see, in fact, demand destruction, it's going to impact oil and the producers. GS. It hit support, but we broke down below it. But we bounced off another one. 284.10 is support on Goldman. That's the low, near the low of the month. Weekly view. I don't think this can be bought yet. They tried to rally it after it broke down last week. It's a retest of a breakdown point. I don't like it just yet on a weekly time frame. I think we need to come down here, 270.55 daily view. The daily chart doesn't look half bad, to be honest with you. It doesn't look bad. If they close it above 290, I'd be more excited. The daily chart looks good, but the weekly chart is more influential. It's got to recapture at least this support level, if not this one here at 290. All right, we'll leave it off with TRX for Tom Lowe because I didn't go over his other ones. TRX Gold Corp. These are speculative, very, very speculative plays. I would just rather do an ETF, but if it's speculative and you know that, fine. Monthly chart, it looks good. A very long consolidation. It hasn't broken out yet. We have resistance above. RSI, another example of an indicator leading price performance, has broken out. Weekly chart. A very nice week. We have resistance immediately above. I'd set an alert. I'd rather pay up for this one. Wait for the breakout. Maybe a retest. Daily view. Nice day today. A lot of the gains of the week came today, if not all the gains came from today. So a very good day. It looks like it's going to go up higher, especially if gold breaks out. It's probably very correlated to gold. So it's looking good. That's right. And McNeil, you're short. Congratulations on that. You're at support, though. Think about making those profits real. At least some of them. I am now over time. Guys, I'm way over time. Guys, thanks for being here. I appreciate it. If you could smash that like button and subscribe, I would truly appreciate it. Don't forget about TrendSpider, 35% discount code below. If you're not on our email list, please do so. If you use the link below, 5-part video tutorial, my top 5 favorite candlestick patterns, those will go out to you. It's free of charge. You'll get notified of when we go live and when I send out free weekly commentary on our best stock charts. Till the weekend, everybody have an awesome, awesome Friday, profitable Friday, great weekend. Happy Father's Day, and